Welcome back to AZ Trading, everybody. Hope you're all healthy. I just want to say a quick thank you to everyone watching my videos. We're almost at 2,000 subscribers, which is absolutely insane. And yesterday we had the CPI numbers being released, which caused this huge bullish move on the indices. And if you're watching this live, you would have seen that this large bearish manipulation leg before this big pump up, all of this happened within the span of just a few seconds. And what if I told you guys that my entry and my execution was placed right at this level? Would you believe me? That's a joke, by the way. Even if I told you this, and if anyone tells you that they did this, that they'd just be full of BS. So we didn't manage to place an order down here. However, I'll turn on my executions and you'll be able to see the trade that we did take. So I'll turn on my executions and the labels, and you can see that we've managed to find a trade over here at this swing low. We've taken a few partials along the way, as well as an additional pyramid position. And just before the start of the new day, we took off our final position right over here. Now, if you've watched any of my previous videos, you'd know that the pattern we like to trade with is called the RMR pattern, which involves the use of ICT concepts. And this was the exact pattern that we used to find this entry over here. So stick around, guys, if you'd like me to go through my thoughts and analysis that led to capturing this trade. Now, I've just got a few dot points here that I'd like to go through in this video. It's a Friday, I'm out during the weekend, so I don't know how long this video is going to be, but it's probably going to be a bit longer than usual. So if you get bored and click off early, I don't blame you at all. All right, so first things first, let's go through the RMR pattern. So first we look for a raid. So when price breaks some swing lows, this is called the raid. So price raids this low, price raids this low. The raid doesn't have to be under or above equal lows. It can just be a single swing high or swing low. But we can see that not only did it raid a swing low, but it also reached a 1 minute gap here on the left. So when this raid section also reaches a key area, this is an additional confluence. And then after this bearish raid, if price doesn't break any structure and continues lower, then there would be no market structure shift. So in this price action, there would be no trade. However, we can see that after price made that bearish raid, we started to break a swing high. And once these swing highs were broken, this would be a bullish market structure shift. So as soon as a swing high is broken, that would be a market structure shift. But there are cases where you can find really great shifts that would add confluence to your trade. And the criteria for that is that the market structure shift has to break whatever created this raid leg. So if we look at this raid leg over here, this bearish leg started over here, and this is that swing high. So in order for a great market structure shift, this swing high needs to be broken, and we can see it was broken over here. So this is a short-term market structure shift, and this is a better market structure shift, a more decisive one. And if you're a very selective trader and you only want to trade the highest probability of trades, then you would wait for this more decisive market structure shift. Let's just say, for example, you did use this market structure shift, you were patient and you waited for this shift to happen. After that shift, we'd look for a return area, and if we look below price has many gaps. There's a gap over here, and there's also a gap down below over here. It's very small in here, but it's in there. It's just right in between those candles. So what this means is when price retraces into these return areas, those are the areas where you can place your buy orders. So this would have been a higher probability RMR setup. However, you can see that I placed an entry over here at this return area. However, I also had an entry much beforehand getting a better price. And the way I found this better entry is by using this shorter time frame market structure shift. That's not as decisive as this one, but is still a shift in structure. So after this 1 minute market structure shift, if we look below and we wait for that return area once more, we have this bearish candle over here which created the shift in structure. If I drag that bearish candle all the way to the right, I would consider this a very key area, perhaps a bullish order block. And you know what happened when price retraced into that order block? That's where I placed my long order. So this is a pretty good example of a slightly higher time frame RMR that also has a shorter time frame RMR within. I'll just go over my partial locations so we can move on through the topics. So for my initial position, I bought 100 units, and this is just for the ease of simplicity, which is taken on a paper trading account. But whatever the case may be, whether you're paper trading or live trading or whatever, whenever you place your order, first you need to measure your stop loss. So in this case, it would be around 50 points. And if I wanted to risk 1%, for example, on a $100,000 account, then depending on your brokerage, I just put this into my little calculator, but my lot size would have been 2. So at all of my partials here, when I'm taking off 30% of 100, which is just 30, then whatever lot size that you're using, let's say it was 2 lots, then you'd have to know what 30% of 2 is. And I have a little partials calculator here as well that I wrote if I take off 30% at each partial, I take off 0.6, 0.6, and then at the end I'd be left with 0.2, which would be the 10% to run. If you don't have a risk management or lot size calculator, there are a lot of EAs that do it automatically. I'm just so used to doing it all manually since it doesn't take much time for me at all. But I'll leave a link in the description of my risk management calculator. I'd recommend to check this one out, and if it works for you, then excellent. Alright, let's just blast through this trade. So my first partial, I took it off at an area with a gap. Took off 30% here. My second partial, I took it off at an area of liquidity, which was at this swing high. Then you can see I pyramided my position, and in hindsight, if I was more optimistic and waited for the better return entry, then this would have been a much better pyramid location than this one. But nevertheless, the next partial over here at this swing high, once again, my second last partial, which is this one at 11.31. I've just jumped onto the S&P, and here on a 2-hour chart, we can see some relative equal highs over here, which would be a very key area. And if I drag those equal highs to the right, we can see what time those highs were taken, and that was at 11.31. And on the Nasdaq, these equal highs over here had not been touched yet. Price was around here. And if I stayed awake all night, I would have taken my final partial as soon as Nasdaq reached those equal highs. And those highs were reached at around 1550. So at 1550 on the Dow over here, I was still asleep, so I didn't take off my partial there, and I woke up around here. And when I woke up, I took off my final 10%. And in hindsight, if I were to be even more patient, we knew that on the Nasdaq, we had more sets of equal highs. We had one over here labeled 1, and we also had a swing high over here labeled 2. And you can see during the London Open today, price reached that swing high area. I'd actually argue that this would have created an equal high. So many people would be thinking that this is a strong area of resistance. And then very recently, that swing high was raided. So this swing high, even though it went up just a little bit over that previous high, I would still call this a relative equal high because I think more liquidity would be generated at this area rather than taken. However, this swing high over here, I'd say that this area would have taken more liquidity than generated. So if I knew what the future would bring and I was very patient, I'd take off my final partial at 350 or 352 when this high was rated, and on the Dow at 352 you can see that price made the tip top of that swing. However, we can't be so perfect with trading, and I'm still very happy with this overall trade. I didn't even realize, but I think we just covered points 1, 3 and 4, so we only have 2 more points to talk about. Excellent. Actually, I just want to mention something very quickly about letting partials run. And there's a little exercise that I like to call partial detachment. And all this means is it's just an experiment in your trading to find at what percentage of your position you're able to emotionally detach yourself from. So for example, if we placed a long trade with, let's say, 100 units, and let's say that this was the objective that you had in mind. However, you did realize that there was a very key area above. And so the way you can do this exercise is once you reach that objective where you'd normally take off all of your position, instead I'd recommend you to try and leave a partial to run. Perhaps you can leave 10% to let it run to the end of the day or to this objective. But I know that some of you 10% would be too much and you wouldn't be able to emotionally detach yourself from it. You'd want to take out those profits very early. So if that's the case, instead of 10%, go down. Go to 5%, go to 2%, even 1%. So at this point, we'd take off 99% of our position, letting 1% run, and just seeing how your emotions react when you have a 1% partial running. And another way you can lessen the emotional burden is just reduce your stop loss to break even, let your partial run and see how it makes you feel. I know that some traders can't even let 1% run, so this could be something that they could improve on. However, I also know some traders that are happy to let more than 50% of their position run. But depending on what your strategy is, what your framework is, whatever, I think this is a really great exercise that'll actually tell you a bit more about your emotions and about yourself. And if you are a day trader, having partials can be quite beneficial. For example, with this trade, if I took off everything at this final objective, my final partial would have been an extra 200 points. And even though it was only 10% that was running an extra 200 points, if I had a full position running, this would be the equivalent of 20 points with that full position. And these little partials are very low effort since you've done the bulk of your analysis, and the profits that you make from these little partials definitely do add up. Alright guys, that was a little bit of a tangent. I hope this exercise was a little meaningful to at least some of you, but let's move on to the point of having a bias and why is it so important. And if you want to know what my bias was for yesterday, the CPI day, I've just got a few screenshots here that I took, and this is what I usually keep in my journal alongside some notes. So this first screenshot, we're on the Euro USD, and we've outlined that we have some very clean buy side liquidity equal highs above. And so on the CPI release, I was anticipating a bearish manipulation before a bullish pump to those equal highs. And here on the Euro USD, you can see that we had a bearish manipulation, but it was by far not as deep as I anticipated. However, that objective and bias in mind to be bullish to those equal highs was met. So on EU, if I have a bias to be bullish, then I'd also have a bullish bias on indices. And so over here, I took a little note just saying CPI day, buy side liquidity, equal highs above are just too clean. And this was just a conflicting piece of information, which was the daily chart. There was a slight market structure shift bearish. So after the CPI day, this would have been a good note to reflect on whether the buy side liquidity that's very clean priority, or did market structure and that shift take priority. But in hindsight, we know that that liquidity above was too clean and that was the priority. And finally on DXY, I've got this screenshot. We had some short-term equal highs above that were getting quite close to before CPI, and we had some higher time frame equal lows below. So once again, my bias was a bullish manipulation to take out all those buy stops before a bearish pump towards the main objective. And if DXY, I want to see bearishness, then indices, once again, I want to see bullishness. I think the point that I'm trying to make is my bias isn't just formed on one market. Of course, you can form it on one market, but what I'm trying to say is when you have multiple correlating markets that are all telling the same story, that you can make the same bias for all of those markets, then it just becomes a slightly higher probability bias. And if I wanted to be bullish, and if my bias was bullish, I would be waiting for a bullish RMR pattern, and that's what formed over here. However, without a bullish bias, and let's say we're just swapping back and forth between bullish and bearish, I'll just give a very quick example. When price breaks this swing high, why don't we call this the raid? And when price breaks a swing low, why don't we call this a market structure shift? Of course, yes, it's a market structure shift. And yes, this was a raid. And excellent, we have a gap over here, which would be the return area. So why, if we place a short here and our stop loss at the top of the raid, why would this just be a failed trade? And if we didn't have all those objectives above in mind, and we didn't have a bias, you can see that when we're very zoomed in on price, it doesn't matter how clean your entry pattern is, because arguably this is a very, very clean RMR pattern to be bearish, but with a bias, and the importance of the bias is to help you filter out these opposing patterns. So you can tunnel vision onto all these bullish patterns instead. And finally, I wanted to talk about how I would have priced the market. So this is just a little bit of fun now. And if I was the market, I'll just go back to that DXY screenshot, and you can see I wanted to see this buy side liquidity be taken to manipulate more traders to take that liquidity before dumping. And we can see that on the DXY, on a 1 hour chart, you can see that those equal highs above were actually left untouched. So if I was pricing this market and I was very greedy and I wanted to make as much money as possible, I'd realize that this area was the weekly high, the Sunday high, which made an equal high on Monday. So I know that there's plenty of liquidity in this area. There's lots of people waiting to short at resistance, to buy on a breakout, or people with their stop losses at this area or whatever. So I'd price the market by going into this area before creating some sort of bearish leg to my final objectives. But you can see, fair enough. I mean, the market did raid some equal highs, so they did grab some money and enticed a lot of buyers. However, you can see the potential that they could have enticed so many more buyers. So this is actually a pretty interesting exercise to do, because when you start to think about how will the market try to over as many people as they can, then you'll really start to see where liquidity is, when the sentiment is starting to be built, like a trend line is bullish, and then you can really start to imagine what the market will do, especially during a high volatility news event, to get as much liquidity or get as much money as they can before going to their final objectives. Oh geez, I'm going on too many tangents. But yep, same thing on the S&P index. You can see that price made a slight bearish manipulation leg. What is this? How much money is the market making there? Probably not too much, right? So if I price the market, I'd dump price down past these equal lows, create so much intention to go short before pumping up to those final objectives. And on that note, we've covered all the topics. I have no idea how long this video is going to be, probably over 10 minutes if I'm not going to lie, but I'll just turn off all my annotations so you guys can take a naked screenshot of the chart if you'd like to outline the RMR pattern yourselves. But other than that, thank you all so much for watching once again. And if you made it this far, you're one of my favorites for sure. Don't tell the others. But yeah, if you learned something new or enjoyed this video, give it a like and subscribe. It makes me very happy. And if you've got any questions, leave them down below. I'll get back to every single one of you because I've got the luxury to do so, since I don't get a million comments. But until next time, have a great weekend everyone, and take care guys. Peace.